What's up, everyone? How's it going? Welcome to today's trade recap and market analysis segment. Today is Tuesday, November 18th. We took a total of 3 trades. Very similar to yesterday. If you guys are in the Discord server, you would have seen my text recap on that. We took 3 trades, but today, instead of being a little bit negative on the day, we're a little bit positive on the day, and I mean, we caught a pretty big day, but we've been getting this, we've been falling victim to the volatility that the market's been giving us. And because of that, we may need to shift up our risk management protocols to adapt with the current volume and volatility that we're getting, right? Because, hold on, let's just go back to when the market opened here, right? Let's go, where is that? Okay. Okay, hold on, there we go. Our like first 1.5 hour, the time where we trade, we're seeing the volume be hovering around 30K now, and 30 30K is like very big. Like typically around this time, usually, or in the past at least, we've seen 12K being the volume per 5-minute candle. Like it's essentially 2 to 3 times that. And with 2 to 3 times more volume, I mean, we're starting to see 2 to 3 times more larger moves and 2 to 3 times more volatility. And because of that, it's much easier to be subject to all these big wicks when we're still using stop losses and take profits that were meant for volume and volatility that is 2 to 3 times less than what it is right now. So to account for that, we're going to adjust our risk management, and we'll go over that in this video as well. But first, let's quickly analyze the market session. I'm just going to go over my trades. I'm not going to go over much else. We're going to go over the trades, and I mean, it was pretty easy to tell what was going on in the market. I hopped on the charts at around 9 a.m., a bit late, that's fine. But we were patient until around 9:30, 9:40-ish, right? 9:35. And we took 3 trades within the span of 15 minutes, or we entered into 3 trades, right? Because we exited our last trade at 9:55, right? And honestly, our idea for all 3 trades were valid. But in the last trade, we had enough room to account for this volatility. In fact, we actually caught 77 ticks on ES. And typically, how many ticks do we catch on ES? Typically, we catch around 20 to 25, 20 to 30 ticks, right? We catch 20 to 30 ticks on ES. This is literally triple the starting of that range, right? More than triple that. We're targeting 77 ticks, and our stops, on the other hand, are, okay, hold on. Essentially, it's 2 times, right? Typically, we target max stop loss 20 ticks, typical take profit 25 to 30 ticks, right? So assume it's 30, this is 77, so a bit over 2x, right? So let's just say 2.2x, and this is also 2.2x, right? So it's a pretty even factor. Like, this is how much we should have been risking given that the volatility is 2 to 3 times higher. So instead of trading one ES mini, we are likely going to shift to 5 ES micros. And that's simply so that if we're continuing to get this volume, we can have higher stop losses and things of that nature. That being said, if we do get a special occasion where we can put our stop 20 ticks at the maximum, like 20 to 25 ticks at the maximum, we can take that on one ES mini because the risk to reward on that is amazing. And why do we want to remove our profit potential if the market's giving us a good opportunity to actually risk more? So honestly, like, if we see a trade where our stop loss may want to be bigger, around 43 ticks, we may want to risk that. But it's been a rough road because of the volatility, and I believe that by adjusting it like this, we can move forward and stop getting ticked down and then it go on our way. And that's what happened yesterday too. So, but I mean, we're on top. We're not necessarily down for the week, so not complaining at all. So let's get started, right? And I'm just gonna see what happened if our market opens at 9 o'clock because I wasn't really there at that time, right? So we had liquidity at 6650. I'll let you know if I see any trade potential. Okay? We move up until 6675 around here, and we start coming down. We're starting to see seller urgency like such, and essentially we're still trying to figure out some direction within the market and a clear viable spread, right? Here, look at what we're seeing. We're seeing buyer urgency. Bids are following price up. That's bullish, right? It's pretty simple. That's bullish. But now we've broken through that, and soon enough, what will you see? Now we're seeing asks follow price down, a signal of selling, right? And we do have this big selling delta region down below at 6600 region. Ooh, maybe shorts could have been taken there, I can't lie. 667, ooh, this might not be bad, but there's not really any target for us to take. And if we did have any target, the target would be higher, not lower. So nothing to really take there. I mean, shorts don't. If we had like say we had a target, a pretty big target like the 6690 level, but we had it down here, and we didn't really have this level. We only had it towards the downside. And we had it at 6650. We didn't take out these levels. We went up, took this out, started moving down, bounced into here. Saw this buyer absorption with the big buyers, and then started making some sell-off. I would take the shorts targeting that, have a pretty decently managed trade, but that's not what we got. We can only work with what the market gives us, right? We'll keep moving forward. See, now we're making more targets for the downside, right? We have targets down here at 6645 region. That could be a viable target, right? $5 below the previous target on the sell side wouldn't be a bad option, but I mean, nothing to force, right? I would want to clear Bookmap if I was going to take anything, right? And as you can see, we see this buying pressure occur again, and you can see this by this wick here at the 845 candle. Just look at that immense action right there. It's very easy to get stopped out, and then the price goes your way, right? Right. I wouldn't. 48 candle, so it's still in this 45 candle. So this big bar is at 6650. Maybe some shorts could have been taken down here. But then again, would I really want to enter with this type of volatility going on? Hell no. Wait, actually, maybe I would. Essentially, the candle went up like this. Then we started moving down, creating this selling action. That's pretty bearish, I'm not gonna lie. And we saw that big buyer quickly get absorbed, right? We're getting icebergs are pretty much level, nothing is deviating. Those are coming in. I mean, nothing really I would have taken anyway here. I need clear motive, and I mean, as you can see with this price action, we don't really find any retracements in good value for us to enter in these shorts, so. We just get constant selling pressure. And now we have that 6600 level, which is pretty strong. Major liquidity level for price. We struggled at that liquidity level. Sellers were getting essentially sellers were unable to break through the 6600 level, and it makes sense. A lot of passive buyers at the region. The overall trend and aggressive strength is towards the sell side, so keep that in mind. This may not be a bad area to take short, right? You gotta see this buying absorption, and you see the buying absorption at that soon. You'll see it soon, right there. But I mean, the spread isn't that big to enter into any trade. It's a buyer urgency as well. I wouldn't want to enter something like that. You took that out. And on the delta, it's showing selling absorption, right? At the bottom, big selling getting absorbed. But at the top here, we're seeing big buying get absorbed. So this is bearish. Soon after, we see bearish action. This is bullish. We see bullish action soon after. But we're really using the big trends indicator to identify areas of imbalance on price, right? There's two regions that can really be marked out. I would say this region. Still watching. I'm seeing anything, any potential to trade. I'm watching to find the stock. I mean, by this point, I'm in the market watching the screen, and I do think I remember this, right? Like at this point, we're moving up, we're breaking this level, and we're continuing to head higher. That being said, when you look at the footprint chart, we have two key regions of potential importance, right? For this, we see the selling, big block of big selling, big buying activity here. We came up to it once, we saw buying absorption and selling follow through. Now, if you look at it, we got whipped out of everything. But we had this region too, and this region looks to be pretty important as well because a lot of stacked followed through selling orders. Right here we have a big seller. Here we have a big seller. Here we have a big seller, a big seller, a big seller. Like this region will probably be important as well because of the big size of them. And same with this region, really. Right? Why? Because it's sheer size of these sellers. I mean, if you take a look, it makes quite a bit of sense. Looking at next price action as well. So these big trades indicator can really help to see where price may reject being the keyword, right? You see all of these stacked follow through sellers. So this pretty bearish. Right when we get to that region, we start seeing selling to follow through. But I mean, we're just watching to see where that absorption occurs. And we're not trying to enter simply off of this region. We want price to go down and find a retracement entry off the initial move. And based on that retracement entry, if there's good value to that, we could enter. Because essentially the retracement entry identifies if you enter in or not. It essentially gives validation for the hypothesis. Alright, let's go forward. It was around here, I believe, right? 35-ish. Around here was when I happened to take my first trade, right? 935. Within this candle. And I mean, I can't lie, the first we had this marked out. We had this idea that price, we were looking for the sells. Why? I mean, look at the big selling action we've seen, right? Very aggressive selling action. You don't want to oppose the trend, especially when there's such a big liquidity level towards the downside, 6600, which is also happens to be a psychological level. So I'm estimating that we at least take out 6600. Now, what do we want? We're already down so much. We're pretty close. We want a retracement or validation to enter it in because we've gone so far and we haven't taken it out. And if we get a retracement and validate that retracement, and then validate the retracement's expansion or retracement's reversal back down to the downside, then we have enough confirmation that we're going to continue and likely take out our target. And thus we took such, right? Now, sell start follow through, we're trying to look for a barrier, retracement, entry, or anything of that nature, right? Hold on. It's just right around here, I believe. 130, okay. Hold on. And it was right here. We started coming up here, and you see this selling barrier. I mean, realistically, it's not that significant, right? And so we entered around 6611, so right around here. And as you can see, that volatility is extremely 20 takes in around a second. Placed our stop above 6620, target 6600. What happened? Well, let's see. We essentially get stopped out quite quickly. We get stopped out. But now 6630 is also I do want to emphasize that here we entered into two trades. First trade, the sell start came through, we got stopped out. Second trade, sell started coming through, we got stopped out again. So the first two trades were essentially just the same trade, right? Nothing was really different between them, right? This one was at 940, which I believe was around here. Yeah, that was the issue, right? We entered 940 candle. First trade we took here, we got stopped out like that. Second trade we had this 6630 level, started coming back down, and we entered short, but again we placed our stop at 6620, right? Like, think about it. Why would we place our stop at 6620 if there's nothing on the order book that says that price won't go up until 6630? It doesn't make sense, right? So, I mean, this trade could have worked out if we simply kept our stop at 6630. But I mean, look at the risk to reward on that. It's not worth it where we got our entry. Now, hold on. Let's just see. That's 52, 35 minus 52 minus 35. That's 17 takes. Oh, hold on. What's 17 times 12.5? 17 times 12.5 is 212. So I mean, if we kept our stop at 6630, we would not even have had to take this third trade, right? All three trades were the same trade, essentially. It's just different levels of exposure. And we saw massive buying pressure start to gauge in once again, right? And this time we got an entry closer to the side of the range that we wanted, right? We saw buying getting up to our selling coming down, and now our stop was at 6630. It was essentially all in, all out type of play. adjusted our risk management protocol to adjust for recent volatility, this would not have even been a problem. So, and as you can see, it does happen to play out. We see a nice selling finally occurred. Now, one thing I want to emphasize though, look at how critical this Bookmap liquidity level was. This level literally perfectly reversed the market. We don't know if it's a root cause of that reversal, but it definitely played a role in it, the 6600 level. Either many institutions had their buy orders placed at this region, or simply because of the fact that sellers didn't find value below the 6600 level. Thus, we didn't get much selling after, but buying saw value, and we saw aggressive buy occur. And psychological levels, once again, it does make sense to an extent. But, I mean, we start seeing very aggressive buying afterwards. I'm not trying to deal with that. Potentially there was something here, 10-15. Let's just see, just for the sake of trade analysis. Let's see. There's not really any target towards the upside, right? Ooh, maybe there is. This looks. Oh, I remember seeing this in one. We're seeing buying aggression. So we need away from it. Now we're going towards it. We need to defend that region. It's a decent size buying. Not fully. And from that buying barrier region, the region we went to 63.5. I mean, potentially play there. Not going to overthink it. We like to not taking it. Another thing that played a role was delta. Oh, hold on. As you can see here, that 6605 delta region, very significant. There was big selling delta that was unfilled. Market typically likes to balance those things out. So we went down back to 66050 and broke below to 6650. Just wanted to add that in there. But I mean, that's essentially going to be it for my trade recap for today. I mean, it was not a bad day. We knew that shorts were coming in, but we didn't necessarily, our risk management was not suited for the recent volatility that caused us to get stopped off. And because of that, we're adjusting the risk management protocol depending on the stop loss, and we're going to look for a clear and important barrier instead of simply the color on Bookmap. We're going to look for important, significant 1.5 to 3x plus typical order book size to classify barrier, and our targets are going to be long extended. So essentially, we're just going to be a bit more strict with our barriers, as volatility may provide fluke barriers, and we don't want fluke, we want real significant barriers. And we're going to continue to leverage these levels on the footprint charts to continue to succeed. So that's essentially it here for today. It was very interesting. We saw how Bookmap and Orderflow really played a role into understanding and playing a much easier objective role. Like, I mean, you could do this with any strategy, but Orderflow helps to objectify it and not second guess your thoughts at times. So there's that. That's all I have here for today. If you have any questions, leave a comment down below or join the completely free Discord server. The link is in the description down below. If you want to check out the Orderflow tools which I'm using, including Bookmap, Livestream, and footprint charts, check out the links in the description for those as well. They both have a lot of free accessibility, but as always, do your own research. With that being said, that's all I have here for today, and I'll see you guys tomorrow for the next market analysis segment. So I guess I'll see you guys then. Goodbye.